G'day everyone, welcome back to Pete's Investing. Pardon the hoarse voice, I've got a bit of a cold, so excuse any sneezing or coughing. This is the US S&P 500 update. We're on a bullish momentum on our weekly and our daily, but just be mindful we're hitting this key resistance on our time frame, and we've got a bit of a divergence on that CCI, which we may see a bit of a pullback in the coming days possibly. Looking at this on the weekly first off, we did have a couple of divergence back here over the longer time period. Now it hasn't. If you followed this, you wouldn't have entered the trades because it didn't fall below our channel, and it didn't do so until that period there when that divergence also played out. So back here, you see here the price is still above the channel if you had drawn it between those highs and lows. So that's how you don't enter the trade to the short side. So you just keep your positions open during that period until, as I said, until it breaks below the channel. With the CCI breaking to the downside in the divergence, and you would have hit your closest Fibonacci range in that area here over those months. So, but at the moment, as you can see, we're on our indicator down here with our oscillator. We're showing a bullish signal on the weekly, so it would have been primarily long positions over the last few months. On the daily, likewise, over the last few days, long positions. But more closely, you can see here, as I said earlier, we've hit this resistance at 44.40, and it's broken up through there. But notice we've got a bullish divergence on the price chart versus a bearish divergence on the CCI. And if I blow that up, you can see it more clearly. There is a clear bearish divergence on the CCI. So again, before entering on this one, we need to make sure it breaks below the channel, and that the channel we draw is within that divergence range to the lowest candles. So we need to see it break below this channel to go short. So at the moment, hold your horses. It could actually go higher possibly. As you saw from the weekly chart, there's always a chance that the divergence plays to the downside on the CCI, but the price still goes to the moves up. So we always wait for it to break below that channel before entering short. On the hourly time frame, longer term, you can see here we've got a bearish divergence versus a bullish divergence on the price chart. Now again, I'll blow that up just so you can see you can see it's declining, and we can actually extend that to this latest divergence pullback. Now for this to fail, we need to see the new CCI up here break above this area here. So at the moment it's still in decline, and that's how we read it. Now, so you can see there, that's the previous divergence which was working up until there. The price pulled back. There was a bearish divergence as well back here. We drew this little channel. The price pulled back, fell within our Fibonacci range and hit our target before our last video there. So at the moment, as I said, on the daily, we've hit this resistance, and the price has been going up since then. But notice we're still in as I said, we're still in a bearish divergence on our CCI. Again, for this to fail, we need to see the CCI break that recent high, and in which case we'll see the price also move up to the upside as well. So we'll keep an eye on it in the coming days, see how it goes. So to understand how to trade this and other trading strategies, subscribe to my Patreon page where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.